Welcome back to the Value Investors Club. I'm your host, Timo Wunderlich. Let's get right into it with VIC Readings, the format where we look at the best of the best value investment recommendations by the best of the best value investors out there. Today we have Pepco Group NV, ticker is PCO PW. Price at the point of filing is $31.72. This is not a recommendation, not advice. Please do your own diligence before investing into anything. Description. Summary: Pepco Group NV PCO is a 3.8 billion US dollar market cap, 21% free float European discount variety retailer in the middle innings of its store rollout plan. PCO is an undervalued growth story whose near-term margins and earnings have been suppressed by cost and currency inflation. At a PLN 31.7 per share, PCO trades at 13.6x FY23E by 30th 9th, 30th 2023 PE. Our target in 2 years is a PLN 65 per share. Background: PCO operates two banners, Pepco and Poundland/Deals. Pepco is a pan-European discount variety retailer focused on women, children's wear, and home goods, offering multiple price points. Poundland is a UK discount retailer focused on FMCG, which historically had a single price point. Deals is an extension of Poundland operating in the EU. The history of PCO is important to understand as it explains the convoluted structure. The Pepco banner was founded in Poland in 2003 by the Pepco Group, an established South African discounter. In 2014, Steinhoff International Holdings acquired Pepco. In 2014, PCO's former CEO Andy Bond joined Steinhoff with a mandate to roll up the European discount segment. In 2016, Steinhoff acquired Poundland and Pepco, and Poundland were put under the PCO umbrella. PCO subsequently invested in deals to expand Poundland's business to the EU. In 2019, Steinhoff succumbed to an accounting scandal, and the Steinhoff estate is currently being wound down on behalf of its creditors, several U.S. distressed funds. On May 26, 2021, Steinhoff IPO'd 21% of PCO in a secondary sale. PCO is run independently of Steinhoff through Steinhoff has the right to appoint 3 of the 9 PCO board seats. In March 2022, Bond retired and was replaced by Pepco CEO Trevor Masters. At the time, PCO changed its strategy to prioritize the Pepco brand. In FY23, 90% of PCO's new store openings will be Pepco stores, and PCO is trialing the conversion of Deals stores to the Pepco banner. This change is important as Pepco is PCO's highest returning asset and marks a shift from empire building to focused growth. As of September 2022, PCO operated 3,961 stores, 2,910 Pepco, 1,051 Poundland. PCO believes that there is wide space for 20,000 stores in Europe, one store per 22,350 persons. PCO cites Dollar General, which operates 18,000 stores in the US, one store per 18,329 persons, with plans to grow to 30,000 stores. Additionally, Pepco currently operates one store per 31,500 persons in Poland. Since FY13, the Pepco banner has grown its store count at a 23% CAGR. In FY23, PCO plans to open at least 500 Pepco stores, representing 17% year-over-year growth. The below chart from PCO's March 9th store opening seminar details Pepco's current footprint focused on Central and Eastern European (CEE), where it has historically concentrated and has a dominant footprint, and the wide space available in Western Europe (WE). While Pepco believes it has room for an additional 1,000 plus stores in CEE, the majority of the white space is in WE. Pepco began expanding into WE in 2020. Pepco started with Southern Europe, which is uh, closer in nature to CEE, and recently launched its first two stores in Germany. To date, PCO has provided positive commentary overall and modeled financials based on its experience in Italy, which was the first WE market it entered. This continued adoption of Pepco's value proposition into WE is the crux of the Pepco story and bears constant monitoring. At its October 13th, 2022 Capital Markets Day, PCO laid out the following new store economics. They say an IRR of WE going forward of 51% and in CEE, the current of 85%. Pepco has many competitors. The closest are discounters Kick, NKD, Taco, Action, and Primark. None is a perfect match as each has a different mix of clothing, general merchandise, and FMCG products. At 3,000 stores, Pepco has similar scale to all of them. Kick 4,000 stores, NKD 2,000 stores, Action 2,000 stores. All are present in the CEE and compete against Pepco already. Kick and Action are expanding in the reverse direction as Pepco from WE to CEE. Value drivers. PCO has three primary value drivers. Number one is store growth. Number two, like for like, LFL growth. And number three, margin expansion. PCO has provided the following FY23 guidance. Number one, year over year store growth at 14%. Number two, overall LFL growth of mid single digits. And number three, EBITDA growth in line with historical rates, 14% to 70%, implying slight margin compression. Factoring these items, consensus has PCO earnings E49 cents per share in FY23. Beyond FY23, the sell side has PCO growing by high teens, driven by continued store rollouts and modest FLL growth. While PCO has significant white space, it is already aggressive in its store rollout. This leaves PCO two drivers to accelerate its growth. Number one, LFL growth, and number two, margin expansion. Number one, there are a couple of potential drivers for LFL growth. Near term, PCO has absorbed a significant amount of cost and currency inflation. Longer term, at its Capital Market Day, PCO outlined two pilot programs to accelerate its growth. Number one, a store refresh program, and number two, the addition of grocery products sourced from deals. Pepco trialed the store refresh program in 63 stores and realized a 20% pickup in sales. It is now rolling it out company wide in FY23 and FY24. PCO is in early stages of trialing the addition of groceries. Early commentary at its Capital Markets Day was promising. Number two, consensus has PCO earning a 14.5% EBITDA margin in FY23. Prior to COVID, PCO earned closer to a 70% margin. PCO sources the majority of its products from Asia, where they are purchased in dollars, shipped, and sold in euros. Over the past 2 years, the company has absorbed a significant amount of cost and currency inflation. Over a multi year view, PCO should recover this margin. PCO's CFO discussed this at the Capital Markets Day. And clearly, focus is doing this without impacting the customer. And in terms of the long term, look where the business has been typically seeking to target our pre COVID ratios. We've always believed that the business that we had coming into COVID was strong and resilient. And the opportunity that we have, absolutely, it would be in the same shape. I think the critical factor here at the moment is the volatility and the environment means that we need to manage the business in a pretty proactive way. If you're thinking about the last year, what Trevor and team have had to deliver is pulling the levers, accelerating things, slowing things down to ensure that we both manage the strategic delivery of the long term, but also the short term financial delivery. The focus remains accelerating our clearly defined plans to deliver on our financial results. And I think that a very important point, we will in no way make short term decisions to enhance delivery 1 quarter or 1 year. This is about delivering on the business. And all of the plans that you hear are about recurring both in terms of capex, cash, sales, and items. So long term, there is remains target the business to be pre-COVID or better. Valuation. PCO is often compared to fast-growing retail names in Europe and a basket of dollar stores. Today, PCO should likely trade somewhere between the two baskets. As a discounter, it is less cyclical than its European fashion peers, but given Pepco's focus on clothing and home goods, it is likely not a counter cyclical like a store. Our price targets in 2 years is PLN 65 per share. This is 16x our FY25 EPS estimate, which factors in a modest rebound in PCO's margin and applies a PEG of 8x. Risks and other items. Beyond the well documented macroeconomic challenges facing CEE, the primary risk is how well Pepco's value proposition translates to WE. Both PCO's CEO and CFO retired in the beginning of 2022 due to health issues. Pepco's CEO has taken over the role of a group CEO, which we view positively. The company is still conducting a search for a permanent CFO. Steinhoff still owns 79% of PCO. At some point, this will need to be monetized. 63% of Pepco's products are sourced from China, with the remainder from Bangladesh 24%, India 10%, Myanmar 2%, and Pakistan 1%. The discount segment is competitive. PCO's primary competitors are slowing expanding from WE to CEE. Catalyst continued updates on store expansion progress. Steinhoff continuing to sell down its stake.